Good evening, ladies and gentlemen. Welcome back to a night of stocks to buy in a peculiar world of correctional periods, a market unlike any market I think I've personally lived through. But honestly, we could say the same about the pandemic, the 2022 correction, and here we are in this ever endless debate of bubbles and just AI and Warren Buffett. And I want to break a lot of this down because we are seeing like quite a large correction going on in certain aspects of the market. But if you're an index investor, you don't even really know this is happening. And let's be real, it's really peculiar when you see like general markets in periods of extreme fear on the back of still like incredibly high valuations. And it makes you ask yourself, like, what's going on? Because in this period of fear, right, we're seeing quite a few corrections across the board. And one person that's really like kind of pronouncing this in a way like he hasn't, and I think it's really important to state this, like he's been wrong a lot. Michael Burry, I think, he's called that a lot of different things over the last several years, largely wrong on a good percentage of them, but like he is just going ballistic. This was the guy that basically shorted the 2008 financial crisis, the housing mortgage bubble that kind of went on there, and now he's like so against Palantir, and he recently just posted one chart to refute them all, and he's really doing a comparable to the .com era, talking about capex expenditures, basically the S&P 500 total capital expenditures, less depreciation, nominal US GDP, and the NASDAQ 100 all-time highs for the fourth quarter of 2025. And he's really comparing this to like the .com era, because what I think he's talking about specifically is the fact that market cycles typically have these periods where we pull forward new innovation in a very excessive way, and we put a lot of capital expenditure behind them before we can actually get to the point where they're generating the cash flow to justify the expenditures, right? We saw Mark Zuckerberg actually say this, that like they would rather lose money spending billions on AI than be wrong. Because they're a cash flow machine, right? Like they're better off being wrong and spending that money than, being. Sorry, I'm saying this all messed up in my head. I'm like losing my mind here. Got to get this together, folks. We got to get on the tracks. It's Sunday night here. It's a long weekend, man. We've been taking it easy. Now we're trying to talk stocks into Monday. Yeah. So, I mean, Mark Zuckerberg was just saying that like, you don't want to waste the money, but it's worth wasting if you're right. Because if you're right, these industries are going to be huge. We know they're going to be huge, but like the .com era, they pulled forward so much value. We didn't see that accretion for like another several years into the future. And unfortunately, we didn't even see the real accretion of it all because of the 2008 financial crisis that really held back a lot of the innovation that was slowly creeping up. And I want to talk about this a little bit more in depthly, but what I find really interesting overall is that, he hates CNBC. And I love how like major institutions and the internet of clowns these days, they're everywhere and including on television. I love that he said, so I bought 50,000 of these things for $1.84. Each of those things is 100 doodads. So I spent 9.2 million, not 912 million. Each of these doodads let me sell Palantir at $50 in 2027. So he's just buying his put options, right? That, effectively, just meaning that he's obviously bearish as hell on the industry. It's funny to watch him correct CNBC, considering these would have been like public disclosures. But he's like, that was done last month on a much better things, November 25th. So we know he closed his fund as well. It's going to be neat to see what he does. Don't know what he's doing. I doubt he's opening an ETF, but it'll be neat to see what he does, because I think it has something to do with wanting to be more public forward facing, because I think it's hard to manage funds in general when you want to do what he's doing, in the sense of running your mouth publicly. He seems to like the limelight, to say the least. Speaking of another limelight exposure, we got to talk about Berkshire Hathaway passing the hat off, the torch to the able out there. The other people that are taking over Berkshire in a very interesting era, end of an era. And the only thing that made me excited was that he bought more Google. And I want to talk about this trade here, because I'm taking a look at continuing to add to maybe Meta here very shortly. Really liking Meta where it's at right now, but I was shocked to see Google make its way onto this list, because being a technology oriented company and still having there could be a lot of cyclicalities to their future. I think it's pretty solid. I'm making a bet on it. I don't think AI is going to disrupt Google search in any material way at this point. I think a lot of people are well aware of it. I'd love to know what is their average buy price here? Do we get like, yeah, so they were buying it at the same time I was buying it, because they're already up 31% on their position. I'm up 60% on mine. So we need to know if, just within the last quarter, where they were like, okay, this makes sense now. Because if it made sense to me, it made sense to a lot of investors. And it's really neat to see the people behind Berkshire Hathaway doing the exact same thing. And it is a pretty material position. It's only 1.26% of the portfolio, but it's $4 billion. In fact, they've added a lot more of it and a lot more aggressively than they have Domino's Pizza. And they've even increased the Domino's position by 13%. They have been increasing a few positions in here, but more materially, they sold 14, another 15% of their Apple position. And what I find really interesting is, if they're going to actually hold on to Apple, or they're just going to continually keep selling it until the bitter end. Because I know Apple looks like a massive part of their portfolio here at $60 billion. But again, in the public equity portfolio, it's 22%, but the company's worth $1 trillion. So really, Apple's, in the view of their entire market cap of Berkshire, it's like 6%. Plus, we don't know what the value of their insurance companies are, but it's likely much, much higher than the position they hold in Apple. So I don't think it's fair to say that Apple's like this massive, massive position. But what I'm really intrigued by is if they continue to add to Google at these levels, and if there's a level at which they would start selling Google. Because Apple makes no sense to me here. I mean, at a 36 price to earnings multiple, the company has very little to stagnant growth and has been for quite a while. It makes perfect sense why they're selling out of Apple, not really following the long-term thesis that they typically do with the businesses that they buy. But when you compare it to something like Google as an example here, I mean, Google's a behemoth making like virtually the same revenue as Apple, but it's growing at double-digit clips. There's no reason that, Google shouldn't be the largest company in the world today. They make more net income than basically any company out there, and they've been able to grow that at, again, double-digit clips. Like, it's disgusting. And to be fair, I mean, I think Google's trading at a much better value today. Wish I held on to some of those shares. Glad I still have a big chunk. Good thing the wife still has some in her TFSA. But like, at what value do we consider Google expensive? Because I mean, if Microsoft and Apple, trading at 35 to 40 times, Google should still have quite a material runway ahead of it. If it's trading at, the same, if we can consider it in the same realm of these behemoths, and I consider it above those. So could Google run up to a 40, 50 times? Does it deserve it? That's a good question, right? I think it's a really interesting question. I mean, if we compare it to, say, like, let's just take a look at the net income here. So Google's doing what right now? I think Google's got the net income of like annual, I think it's, the last quarter was what, 35 billion, something around there. What's Nvidia doing right now in comparable? Because I mean, Nvidia is trading at quite a hefty valuation right now too, being the largest company in the world. But how much is this net income caught up to Google as an example? Yeah, so I mean, they still have a little ways to go. I mean, they're only doing 26 billion, in the last quarter, which was up 59%. They're still growing excessively, but again, they still got a little ways to go before we're talking about Google-like income. Now, I want to talk again more about what's going on with the crash side of this, because again, like, Google went through its correctional period, but there is a lot of stocks right now that you just don't see in the broader indices that have corrected, and we're starting to see some corrections that bounced a little bit here. And I found it really interesting and why tobacco stocks have taken off so much. Tobacco stocks have largely started trading like tech stocks recently, from not only a valuation, I mean, growth. Like, they've gone through like this incredible cyclical period of, incredible bumping. It's hard to put these charts over each other. British American Tobacco, has done exceptionally well. Philip Morris, even Altria Group. Philip, I mean, I can't get over in the last 5 years, is up 102% now, let alone the insane dividends they were paying. But this run up, and I can't figure out why, in what reason have stocks like this just gone so parabolic? And I've looked into it, and everyone's saying, oh, well, if everyone's switching to higher margin products like vapes and nicotine pouches, and, tobacco sales, especially internationally, are still doing fairly well, but not to the level that these things, in my opinion, should be trading at, 30 times, 20 plus times multiples. It doesn't make like a huge amount of sense considerably. Like, look at Philip Morris. If we just take a look at this real quick, like, again, this is a peculiar market for many reasons. Like, it's trading at a 28 times. And if we just take a look at the revenue here real quick, I'm always really shocked to see that, like, the revenue of Philip Morris here is basically nowhere. Like, it's growing in single digits, usually 5 to 10% range. Net income hasn't really gotten anywhere where it was back in 2022. Hell, even the net income was the same back in 2012. Like there's nothing that is fundamentally that different about these companies, right? Speaking about fundamentals as well, like we have seen a large deterioration in many of the consumer staples out there, your Pepsis, Hershey's, Nestle's, Kimberly-Clark, things that are technically recession-proof businesses. But again, I can't tell you what goes on with Pepsi supply chain. I can't tell you what goes on with a lot of these businesses, but I'm still really shocked to see how many of these have had massive drops in the last 5 years and have offered basically no equity growth outside of their dividends. Like these are pretty pronounced companies. Like, I mean, Nestle's the largest food company virtually in the world. I mean, it's a mega cap company, and it's just, it's come down quite materially, from some of those highs. Like, I just can't get over it, right? Like, look at these drops in some of these stocks, like Hershey's, Pepsi, Nestle. They're all just getting clobbered right now, right? And I've looked into a lot of their earnings. There is a lot of cyclicality, tariffs. There's been a lot of supply chain hiccups when it comes to, chocolate, which, by the way, is correcting now. So I don't know if it's a good time to buy into some of these. I told you guys you could potentially, you could potentially play Hershey on the chocolate prices now coming back to a cyclical low. So we should start seeing margins expand here. It's nice seeing cocoa prices start to correct, and it's likely this is a trend that'll continue because it's related to farming, and it's likely that they've got the supply chain better under control from the droughts and problems that they experienced, I guess, in where's all the cocoa beans coming from? I think Africa, isn't it? West Africa supplies a big, but what does it say up top there? I think we get a little insight that driven by brighter outlook for West African supplies, reports from Ivory Coast cocoa farmers stated that the cocoa trees are doing well, and recent dry weather helped harvest beans dry, supporting a positive outlook for the October to March season. So, I mean, is it time to buy, the chocolate company of the world, Hershey? I mean, it's still trading at pretty decent lows. I don't know if that's something you could purely play the company off of, but it's a confectionery company, right? I mean, look at their net income. Like, their revenues were good, but their net income is down 38%. Like, just horrific. But if we take a look, man, like, I'm shocked because from 2021 here, let's take a look at the quarter over quarter and just get a clear idea of the revenues here. I mean, they went from 2.9 billion up to 3.1. In fact, the revenues have been trickling to the upside. It's just that their gross profit, has deteriorated from last year when it was 1.5 billion, that 30% correction. So I've always found Hershey to be quite an interesting company. But yeah, I don't know. It's just really interesting, Kyle. Don't tell that to, let me read some of your comments here real quick, guys, before I get too far ahead of myself, because I do want to talk about a lot tonight, and even a bit about these yield max stocks that are also crashing. Very interesting, your thoughts on Celesta. I'll take a look at some of these toward the end. I think it might be a stretch. 30s is easy, but 40 seems high to touch. Yeah, but I mean, it's hard to tell, right? Because when you get companies growing, if they can consistently, like, how is Google growing as much as it's growing at the level it's growing at? I mean, that's the real perplex. I mean, again, go back. I've lived through it, and I'm not that long of an investor. Like, I've only been doing this for 10 years, but I remember when Apple materially became the first $1 trillion company, and what like an insane idea it was to think that companies could get that big, let alone not only could companies get that big, but that they could grow at literal like mid-cap levels at that scale, right? Like, who could have guessed that Apple would hit 1 trillion, then go to 4 trillion, right? Like within just less than a 5 year time frame. Like, it's kind of nothing short of insane at how much these stocks have run up. Buying some Hershey shares would be pretty sweet, no pun intended, I'm sure. What about PayPal? I hate PayPal with a passion. I'm making PayPal rich right now. They grew most tobacco in Canada, and when BAT bought Imperial Tobacco, they took most of the products to Brazil and China. I know Kyle just likes PayPal. I mean, what is there to like about PayPal? I mean, it's nice that they're partnering. I think they partnered with Google in some sense, didn't they? But I mean, they've completely, like, their business is just corrupt to no end. There's competitors coming out left, right, and center. In fact, I think you're better off buying what's the competitor out of the UK that's really, really good? It's also publicly traded. I thought about buying it. God, I'm blanking on it so hard. What was it called? Let's see if it comes to me while we look at PayPal real quick. But yeah, I mean, PayPal, obliterate destruction here. I mean, the stock dropped 80% and has never recovered. I mean, they do the most weird, corrupt things. They're under endless scandals, right? I wonder whatever happened to the honey thing, where they were like manipulating influencers to promote honey, and then they were just stealing their commissions. I'm surprised that wasn't illegal. Let's just take a quick look and see how they're doing from a revenue standpoint. Yeah, if there's one, what the hell is it called, man? My buddy was trying to get me to sign up to it because they don't charge fees on transfers to banks and stuff. Yeah, I mean, they're growing in the single digits, right? Like PayPal is an incredibly mature company. It's growing, it's doing pretty nice overall, but they're just the worst. They're the absolute worst. I mean, from a net income standpoint, they're not doing any better than they were back in 2021. I guess that's why people think it's cheap and it should have somewhat of a recovery. But to be fair, I think competitors eventually will take over them. I just can't see how they don't, guys. Like it's the same thing with Valve right now. Anybody that's into the gaming industry, like Valve is basically trying to destroy Xbox and PlayStation because they just got greedy. PayPal's doing the same thing. They've gotten so greedy. Competitors are coming up left, right, and center that just are basically giving people the opportunity to give them the middle finger, which I should be doing, by the way. I don't know why I still use PayPal. They're screwing me royally. Come on, guys. Tell me what the stupid company in, not stupid, but what's the company, PayPal competitor in Europe? What the hell is that company called? Pioneer, no. Revolt, Claire, Wise. That's the one. Wise. What is it? And it should be a publicly traded company. Yeah, this is a company I would buy any day over PayPal. I think just because like my buddy like swears by them. Can I see their actually? Let's just go on to Yahoo. I don't know if they're on macro trends, but let's take a quick look and see what they're doing for revenue right now comparably. I don't know if they're doing any better or worse. But let's just. Oh my God, look at the growth behind this company, guys. This is what I'm talking about. It won't show me quarterly, but from 2022, 563 million to 1.8 billion in 2025. Should we be buying this stock? Jesus. I mean, I only get to see the quarter going back to the first quarter of this year. Why won't it show me quarterly? We should look into this. This is a fascinating company that's got like insane growth and a fairly reasonable value behind it. But this is what I'm telling you. Like, they're just far better companies that are growing way faster in the online payment space right now. Yeah, it's really interesting. They only traded at 24 times multiple, eh? Really interesting for a company like that. But speaking of like other stocks that have just done miserably, and, you know, I'm really interested by this and like what happened to SCHD, because obviously past performance isn't indicative of future returns. But like, I'm just utterly fascinated the fact that like I held SCHD, like this is what we were promised on SCHD right here. This was the promise, and then we all bought into it, and this is the reality. It's like, and I'm seeing a lot of people out there that are continuing to stick by this. And I look at the companies in it, and I'm just really perplexed by the whole thing because, you know, there's great companies in here. I mean, you got things like Amgen, a lot of healthcare companies, AbbVie, Coca-Cola, Bristol Myers, Chevron, Pepsi. There's a lot of great companies in here. I'm just shocked at the lack of performance just against the broader S&P. And again, like, even though they're great companies, they're companies that I just don't want to hold. You know, I guess you could make some arguments here for some of them, but I don't really care for Coca-Cola. Not too big into the healthcare space. Pepsi's just getting absolutely devastated. Lockheed Martin, yeah, if you're into war stock, sure. But yeah, and even on the other spectrum of this, right? So like the dividend side of things, there's a lot of destruction going on. But even from the other spectrum right now, like the growth side of it, we're not really seeing it in mega cap tech with the exception of a few corrections. But I mean, crypto is getting absolutely slaughtered right now. And I don't know if this is just like weak hands, end of the year, people profit taking, but we had a bit of a shock. And when the market has any kind of a shock, and I told you guys this, the most speculative, highest volatile things that don't have equatable value outside of tradable value, they're the things that get absolutely wrecked. And, you know, we saw it. Anything that was tradable, Pokemon cards have had a bit of a recovery here. But I mean, NFTs, crypto, just anything, shoes, the Nike market got devastated. Like anything that just doesn't have an intrinsic value gets wrecked. So I'm really curious to if this is a trend that continues, because Bitcoin's been relatively flat and there's not a lot of people buying the dip right now in a material way to get us back over 100K. So I'm finding that really interesting. Oklo, companies that aren't generating any material revenue, you know, that have a lot of promise into the future. These are starting to correct pretty heavily, down 43%. Even great companies like Oracle, after the deals they've signed, have dropped 32%. So small caps, same sort of deal. We've seen it with companies like Aduro that are more story oriented right now. They're correcting. And somehow Meta's getting caught up in this for no real good reason. So I might buy Meta here because I don't think it really deserves the cascading results of being a mega cap company. It just seems to be the ebb and flow, right? But are you guys buying these stocks right now? I mean, the opportunity's here. Like, I feel like if you're investing the broader markets, I don't see a real reason for them to drop materially yet. The AI bubble is not bursting just yet. I mean, they're going to keep spending money on this stuff for a while, so we could probably get another couple years out of it. maybe, who knows? I'm not really betting on it outside of the S&P and just getting exposure to AI through Google and Meta and stocks that are more favorably valued. But I mean, are you guys picking these dips up? Because these are the rare opportunities. I mean, when things drop 30%, that is not a small drop. That is a good correction, a good crash when it happens in less than a week. So I'm just curious, like, what do we do? Because I'm going to keep cost averaging the indexes. I want to buy more VDY, but like my mouth starts to drool. This is where you make the money, right? You find things you understand. Yeah, we'll talk about Misty and MSTR in a minute. you guys and your Misties and your MSTRs, my God. Thoughts on buying Amazon or Robinhood these days? So to be fair, some people pointed it out. I'm really impressed with Wealthsimple. Like, Wise is now partnered with Wealthsimple, really, for foreign transfers. My mouth's starting to water a little bit more here. Should I be buying Wise over Robinhood and all these other stocks right now? I don't know. Yeah, Wise is just one of those companies that's smart enough to compete and just, really lower the prices. But when it comes to like Amazon, I mean, Amazon's looking, I don't know. I've never been able to buy Amazon just because I don't understand it all that well. Their revenues are a bit manipulative. I really don't like, because Amazon technically makes more revenue than any company out there, but they're not really making their own revenue. It's not like when you look at Amazon doing $691 billion, that is just them having a liability on their balance sheet that has to get paid out. Like the vast majority of that is liabilities, because when somebody orders my product and I'm storing it through Amazon and I'm selling it through Amazon, Amazon takes that income that I sold for my product and they mark it down as revenue, and then they have to pay it out. So creatively, I've never been like, that intelligent. I never understood their growth all that much. To be fair, like I can only understand so much of the market, guys. And I just don't understand Amazon. I get the business model. I get it. I do. I just like, look at when China came in and the tariff started. China sells 60% of everything sold on Amazon, is all coming from China. I don't understand the supply chains. I've never sold anything on Amazon myself. I bought some stuff on Amazon. I don't materially buy like too much. Let me just pull up their balance sheet or Amazon Investor Relations real quick. I think Amazon's an interesting company. I think they have a lot of potential for sure. I get why people buy it. It's just never really been a stock for me. Let me just take a look at their earnings release here, just out of pure curiosity real quick. Balance sheet. I mean, they got $70 billion in cash. Oh, that was 2024, $78 billion in cash. I mean, they're by no means short of cash. Let me just scroll down here. Yeah, so net product sales, right? If we take a look here, I mean, they're doing, total sales of 503 billion. But then you look at the operating expenses are 448 billion, right? So what's funny is the fulfillment, right? So the fulfillment and cost of sales, like that's like, so I just find it funny that they're showing these total net sales and product sales, but Amazon's not the one selling the products. They're just the e-commerce platform that we sell the products through, right? So this is what's always kind of like, it's just not an easy thing for, I think, a lot of people to grasp when they look at these numbers, because they might just presume Amazon's the one making this money, but they're not. They're just taking fees, right? Same way Shopify does, same way everyone's doing in their own aspect of business, I guess, to some extent. But it's an interesting fact, right? What about their assets? Can we find their assets and liabilities here real quick? Yeah, so I mean, so if you take a look, they're sitting on 727 billion in total assets. I mean, they got to have so much plant, property, and equipment. But if you look at the accounts payable, like they owe $106 billion, accrued expenses, 68 billion, unearned revenue, 21 billion, total current liabilities. So they owe 195 billion. But I mean, they are sitting on, a hefty amount of total assets, but some of that's inventory. Again, how much of that is Amazon's own product? I don't know. It's an interesting conversation to be had, but if you know a lot about it, I'd love to hear about it, because I have nothing against Amazon. I think it's one of the best companies in the world. It's the same thing with NVIDIA. NVIDIA is one of the greatest companies in the world. I just don't, it's just not a company that I truly understand enough to want to buy it. When it comes to Robinhood on the other spectrum, this is more of a hype stock. My fear with Robinhood is it's cyclical stock, and guys, like, this is unsustainable. So this is my problem, right? Like, the company's growing excessively right now, right? Like, if you look at their revenues, and this is what kind of throws people off, is they think this stuff is sustainable. Like, I mean, they went from 1.8 billion to 4.2 billion. And the reason I'm saying it's unsustainable is because the revenue is generated from a lot of trading activity, crypto, and they do excessively well when the market is doing excessively well. To some extent, I mean, they did pretty good going through 2022, surprisingly, but you got to imagine from 2022 versus 2021, the revenue dropped by almost like $500 million, right? Like, they tanked miserably. And that wasn't even that bad of a correction in like the grand scheme of it all. So I just don't like stocks like this where we're in a hype period, and to buy it during the hype, because past performance isn't indicative of future returns. You're buying a stock that purely generates revenue off a lot of active trading and a lot of speculation. And I think a lot of people are well aware of that. I get Robinhood has a lot of aspirations the same way Tesla does, but at the end of the day, like, you do want to see fundamentals backing it, and you want to have a good understanding that those are going to be reliable. So yeah, I wouldn't touch Robinhood. I mean, the same could be said right now to some extent with a lot of trading platforms out there, but I do like Wealthsimple, man. I like Power Corporation that holds it. I wish you could own Wealthsimple in and of itself. I don't know. It's a tough say, man. It's a tough say. Like I said, I'm very hypercritical in markets like this of what I'm buying. And the only stock that sticks out to me remains to be like Meta. When Meta tanks like it is on the stupid news that it tanked on, a one-time tax expense. Come on, please, guys, please. Any interest in Alimentation Couche-Tard? This is an interesting one because they own a lot of gas stations. I'm going to butcher this. Oh my Lord. Let's see if Google can translate my horrible spelling. No, Alimentation. Is it AMT? Is that the ticker for it? Yeah, it's right there. Let's look at the stock. My spelling is garbage when it comes to French. Those Quebecers out there, But if we take a look, I mean, it's been basically flat since 2024. It's down actually about 18%. It just looks flat, but it's down about 18% from the all-time high. Let's just take a look here. Revenues, things are depleting a little bit. I haven't looked into exactly what's causing the flat line in the revenue because there isn't a lot of growth since 2022. Gross profit has increased, so they're managing to increase margins a little bit there, which is nice to see. But yeah, I guess, they're doing okay. They're just mostly flat. Year over year, they're growing a little bit, but I don't know about if I want to own gas stations, guys. Have you been to Max Milk and like these places that Alimentation Couche-Tard owns? They're like overpriced. Like if I go to a gas station, I'm not buying a fucking chocolate bar at the gas station, guys, for $3 or $4. Walmart sells them for less than $1. I'll go to the dollar store. It's like Dollarama. Dollarama, I mean, God, what an impressive company. Eh? Who would have guessed? Who would have guessed? Great branding, even though nothing costs $1 there anymore. And my God, like this would be a way better company other than it's very expensive than Alimentation Couche-Tard, in my opinion. But I just don't get the whole gas station play. What is like, if brick and mortar is dying and we're going electric, give it 10 or 20 years and we'll get a more clear image of how well Alimentation is able to perform. I know they're getting into cannabis as well, which is another really tough industry to be involved in. So it's not a play for me. Loblaws has done really good the last 2 weeks. Yeah, it has. It's not a fast growing company though. I'm not a big fan of it for the growth side. It's trading at a very high multiple for its value today. The earnings weren't bad, but like the growth rate is like single digits. They did have a good period coming through 2021 into 2023, but why did the revenues bump up to 19 billion? What is the deal with that? I'm not really sure what's going on there. Gross profit still pretty strong, but I don't know. Like I said, it's not a company that I'm a big fan of overall. I don't like grocery stores either. Do you guys understand half this shit? Or you just walk into some of these places and you're like, oh, like I buy bread here, it must be a good buy. Or I use Amazon, it must be a great buy. I really feel like, and I'm not trying to like belittle anybody's intelligence out there, but am I the only one that's like, I don't know any of this shit? Like, if I ever walked into an Amazon factory and I saw all the robots, my jaw would be so far on the floor that I would have to sit down and get somebody to show me a spreadsheet to get me to understand like how you operate a business like this. I really feel like people overcomplicate investing, and like you're never going to hit a home run. I mean, you could just broadly invest in tech. That's what's worked for the last 15 years. But like, you got to be so damn careful today because people are just like buying up everything. Like they're all into uranium now, and they're all into like precious metals and this and that and this and that. And it's just because it's performing well. And then what's going to happen is the same thing that always happens. The reason it's performing well is because there's a slump in the supply and demand. And then eventually the demand, slows down and the supply catches up, and then these prices correct. And then they regret getting in when everyone and their grandmother was talking about. Like, it's the same story over and over and over again. And the only thing I can understand for now is that like Meta's going to keep going, Google's going to keep going, Apple's going to keep going. Like these are businesses that I think are easier and fundamentally to understand. And then if you know the balance sheet side of it, you're going to look at Apple and you're going to be like, I can't buy Apple, even though it's a great business. That's why, Warren Buffett is selling it. Oklo, like I've never run a nuclear reactor in my entire life. I can't, I can briefly understand the mechanics of it. I mean, it's a very complicated way to heat water up and basically just turn copper and get some electricity flowing. But I've never built a nuclear reactor. Like, how the hell do you even regulate that stuff? Like, you can't tell me you understand it enough to pump the stock up. Like, you just can't be blindly buying shit, guys. It's like the biggest detriment to destruction of one's wealth over time. Hi, Kyle. What's your thoughts on the current sector rotation to healthcare stocks? Is there a rotation right now? Like, what's the healthcare sector doing as a whole? I mean, healthcare ETF. What's the big one in the States? The iShares US Healthcare. iShares US Healthcare stock. Let's take a quick look, shall we? Let me share my screen here. Let's see what's going on here real quick. Healthcare. Yeah, you're right. They are recovering a little bit, eh? We're going up. That's nice to see. This could just be a defense play. I feel like a lot of money doesn't leave the market when tech starts to sell off or we see these cyclical rotations, because I really feel like people are just probably throwing money, into some of these healthcare stocks. Like, what's Amgen doing right now? Yeah, I mean, they're pumping up a lot, right? But look, this is exactly what happens when stocks get skittish. There's a lot of fear and greed in the market. There's just, the fear and greed index is at like extreme fear. So, and we had a big correction there. So, I mean, it makes sense that people are just throwing it into healthcare stocks. That's usually what happens, right? I mean, I guess Pfizer's not getting much of a bid. It did pump up a little bit there, but I couldn't tell you. There could be something fundamentally going on here I'm just missing. I'm not a savant. If you know what's going on, let me know in the comment section below. I'm probably going to load into Google because of the main market goes risk on again. Google's 300 end of year. Probably. It was crazy to see it at a 17 times multiple. It's crazy that Buffett wasn't buying it there. He waited a little bit longer, but I'm glad we picked up some at the 17s. That was kind of crazy. And now it's again like meta, right? Like, I feel like I've just got like 3 or 4 stocks that I follow pretty religiously. And when they go into these crazy cyclical down periods, because people just don't like the news, it's just such an easy buy. Thoughts on Well Health? I haven't heard that one in a while. I actually used to work with that company once upon a time. Well Health. How are they doing these days? Tech stock. It's kind of crazy. I'm trying to figure out how TELUS was able to get like 100 million healthcare subscribers. Wow, they got wrecked, eh? They're not doing so well right now. What happened to these guys? Revenue's up a lot. They're trading for about $1 billion and they're doing 364 million in revenue. That's not bad. It's growing. It's popping up 50%. What happened there? Why are they in such a good growth phase here? They got some gross profit going on. Decent gross profit. I mean, damn. Yeah, I mean, this could be a reasonable buying opportunity here, if anything. Doing a pretty decent amount of revenue. I mean, if you compare it to Palantir and all these other growth companies, they're doing just about as much revenue as the value of the company. That doesn't make any sense. Usually these companies trade at like 10x, or at least 3 to 5 times sales. Something interesting going on here that might be worth looking at. I mean, obviously they're still operating at a loss, but their gross profits are great. So what are they spending all their operating income on? Why was their operating expense so high, but the gross profit was great? So they're doing it. Okay. So selling and administration. So they've really pumped up on sales. So they're trying to scale the business through sales right now, but their gross profit's incredible. Might not be the worst company to buy right now. Hey, they could be in a turnaround phase. The market just hasn't caught up on. The numbers look pretty good. Interesting stock. Might have to take a double look at that one. Healthcare is a defensive play when the market. Yeah, so basically that's what's going on. What else is going on here? Thoughts on home builders? Do you know the home builders well? Real estate's in a real weird place right now, man. I haven't looked at them in a while. KBH. The home builders here. Let's take a look. There's a few other ones out there too, like Toll Brothers. Is Toll Brothers another home builder? These guys go through a lot of cyclicality. These are so secular. I don't understand them well enough. It's like Home Depot, right? Like Home Depot is probably the easiest go-to for understanding housing expense. And right now, obviously, Home Depot hasn't done shit for like 5 years. Nothing's really gone on here to make it that exciting. I don't know. Real estate's real rocky where I live right now, so I wouldn't be too comfortable getting into it. Kyle, I've been talking about commodities forever and the day. Remember? See, yeah, I mean, you're a commodities guy, man. I love that everyone FOMOs and walked away flush. Like I said, I've never been a big fan of commodities. I do like Canadian natural resources right now. I do like, I love watching the gold miners, but The only thing I said you could really do right is just buy them, set a stop loss, and just keep raising the stop loss as they rise and hope gold stays high. But if you're into it, man, you made a lot of money. If you're smart about it, there's still a lot of potential in it. It's just not an industry I care that much about personally. Like I said, I can't buy everything, right? And I don't want to broad diversify. I just rather keep focused on what I think I know works for me. But Buffett sold out of Dr. Horton and Lennar. Those were good times, Hambone. I'm thinking Intact Insurance is looking okay. Dividend Grower is Intact. I haven't looked at Intact. That's a Canadian one too, isn't it? Intact Insurance. Let's take a look at that one. The insurance players are still crushing, but I think it's because they're leveraging U.S. treasuries and stuff right now, because like these companies sit on so much cash. I haven't been able to deep dive them too much lately to figure out how they're still doing so substantially well when they can't make money off that interest like they were. Yeah, Intact, it seems like a pretty solid stock, though. The last revenue here was really good, too, eh? Single-digit growth, but net income up 315%. My God. Insurance companies, don't really understand them that well. There's a lot of cyclical movements. Not cyclical. I think that's a bad word to use for an insurance company. All good Canadian home builders are private, probably VFV for the win, always. Just buy VOO, I know. But we're here to make money, right? I mean, VOO is a good place to make money, but I'm a stock player, man. I have been my whole life. We went pretty crazy on Google. That worked out. I can't get over, I wish there was a way that I could implement this into telling somebody a direct strategy, but there's no direct strategy on investing. It's a very hard thing to tell someone how to do, because you can't just go blindly look at everything and just presume it all works just because it's going up. That's the hard reality of it. Because right now, we could talk about yield max, right? I mean, this is a good example. Everybody's flip-flopping out of these now, even though they were the best thing in the world and people were using it to fast track their mortgage. I mean, I feel bad for these people because they're just, unfortunately, they've drinking the Kool-Aid and they haven't been slapped upside the head hard enough. Though I did think I mispronounced what cash secured puts were in this video, because I think I said it gives you the right to buy them. I think cash secured puts gives the seller of the shares the right to sell them to me. They have to execute that option, and I just give them the right to do so if they want to execute on it when the stock tanks. But regardless, I mean, people have really come over to my side, because my God, I was getting a lot of heat when I was talking about yield max and covered calls and how dumb they are for the most part. And God, I was getting a lot of heat. And now all of a sudden, everybody is like, oh man, it's a great video. Kyle, you are the daddy, lol. It's like, I get it. But, I was just trying to be hyperbolic and entertaining. But I laugh immensely that I can drink the tears of the clowns that don't understand what they're doing. To be fair, I don't do covered calls. I don't do option strategies. I work too much. I do a lot of other things. I'm very happy. I know people that have incredibly successful implementations of option strategies in my chat group that have made an ungodly amount of money this year off of it. I think about doing it sometimes, especially when I sold Google. I thought about it, but I'm so lazy, and I know it doesn't take that much to do it. I understand it well enough. At least I think I do. I could be wrong. I'm not a genius here by any metric, but I feel like I understand covered calls well enough that I recognize the absolute absurdity of yield max. Scary how Canadian banks are doing so good. Not really. This is the same thing with the covered calls. If you're long the banks, I don't know why you would do covered calls on them either. I don't mind HMAX, though. It's not the worst thing in the world. It's another big one of the covered call investors out there. How is HMAX doing anyways these days? I'll give you a quick anecdote on the banks, because I've seen a lot of people fear-mongering the banks. But I'm here to tell you, I think they're in a new super cycle. HMAX, I think, has been doing pretty good because the banks have been pretty stable. Look at since inception, yield max 14%, last year 25% almost, not bad at all. But again, you are selling covered calls, which means when they get called away, you have to buy the shares back at a higher price, limiting your returns. So if you just bought Zeb here in the last year, you'd be up 29% before. It's not bad, and that's before the dividends. Keep that in mind. That's long before the dividends. So if we look at the total returns of ZEB, the equal weight bank ETF here in Canada, what have we gotten? Of course, it's going to take forever to load. Can we look at the price and performance here and comparable? Of course, it's going to take forever to load because BMO's website blows. Let's take a look here. Yeah, in the last year here, it's 2 years, it's up 40%. The last 1 year, 36%. So this is the reality of covered calls that these fucking idiots just don't like seem to grasp, because they're in this state of delusion where they need income for some reason, because they probably underinvested into their retirement, or somehow they get solace in getting a cash check into their bank account while they let someone else sell and trade the shares around. Blows my mind. Oh, I can't sell shares. It's the holy sin of investing is to sell shares. God, Warren Buffett selling Apple, holy sin. I could never do that in my retirement. I have to buy call option ETFs because they'll pay me out and I don't have to sell shares. Meanwhile, like the trader that you're paying a god awful fee to is just literally liquidating your shares and then buying them back at a higher price. But hey, guys, here's the premium. Take the premium. You're still making money. Don't let them tell you you're not making money. You're doing great. Sorry, I'm going off the deep end here. I always do. But back to the banks. Back to the banks. Don't clip that. Somebody's going to have a meltdown on me for that one. But let's use Royal Bank as a good example here. This is my favorite example. People don't realize that we're in an earnings super cycle right now for banks. What's Royal Bank trading at? So the problem with dividends in a market like this, guys, is we're in a growth period. And when we go into a growth period, dividends will get smaller naturally because people are willing to pay higher prices for the stock today, knowing that the growth is going to be abnormal into the future. And Royal Bank's trading at a 15 times multiple, which I will remind you, I believe is the highest multiple in Royal Bank's history. Let me just take a quick look. And that's really weird to say. I mean, considering, a 15 times multiple, it is the highest multiple Royal Bank has ever traded at. And if we take a look at, let me just go back to their thing here and take a look at their investor relations real quick, because I just want to show you why this is happening. And I've talked about it quite a few times. So why is their net income up 21%? Now, I'm not a genius. Like I said, I don't know every sector. I don't understand financials to like the utmost degree. I mean, the banks are pretty easy to understand. You put your money in it, they loan your money out on credit cards and debt, and they make interest payments, right? And the bank makes a shit ton of money off the money you put in the bank. But how are they growing their net income at 21%? This is like Facebook level growth. I mean, this is tech level returns coming from the largest company in Canada. How is this happening? Well, the only thing that I can conclude by my own stupidity of not having a financial degree is that for some reason, provisions for credit losses are deteriorating. And what a lot of Canadian companies did very intelligently was do a lot of acquisitions in the last couple of years. Royal Bank purchased the Canadian counterpart of HSBC. That really helped bolster their revenue. But a lot of that revenue wasn't getting actualized into net income because of the higher interest rate environment. And unlike the United States, and I don't know about now, but unlike many places in the world, the Canadian banks are heavily regulated because they operate as monopolies. If Canadian banks were to go under, the Canadian economy would falter to a major degree. It might be like Greece in 2008. And luckily, we do have a government that highly, highly regulates these banks. And they said, look, if interest rates are going up and people are renewing their mortgages and their cash flow is not changing, that means the likelihood of them defaulting on their loan also goes up because the cash flow to cover the debt is starting to narrow in its margin. So what are we going to have to do? Well, the government says, look, you're going to have to put some of your profits aside in case, not if, like it's not like it happened, but in case it happens. And that's the period that we lived through. We lived through a period where banks were making record revenue, but they were losing the net income side because loan loss provisions are exploding because of higher interest rates. We went from 2.3 billion to 3.3 billion year over year. I mean, substantial growth over the last 3 years in loan losses. But all of a sudden in the last quarter, what happened? Loan losses went down substantially from 1.4 billion to 881 million. So if loan losses dump back down and continue to go down, we're going to go through a period of 20-30% earnings for the banks for the next year. Like we're going to get an incredible earnings cycle, which means two things. Though the dividends might be lower, it's very likely we're going to get higher dividend increases. What's the payout ratio right now on Royal Bank? I think it usually shows you here, doesn't it? Payout. Does it show me? No, is it not going to show me the payout ratio? It usually does. No, not. I think TDs usually does. I think do they not show me on this? Or am I going to have to pull up the supplementary or the supplemental, whatever stupid financial report that shows me the, I know some of the banks usually show you the payout ratio of the dividend. Can I just take a look at the dividend? Maybe it'll come up here somewhere. Really, it's not going to show me the dividend on this. Yeah, I can look it up later, but you get the sense of it, right? So, yeah, I think the banks are going to do exceptionally well. That's why I like buying VDY aggressively right now. I think the energy sector is underappreciated. I think Canadian Natural Resources is in a marvel state of growth, unlike any oil company on the planet. And I don't think people are recognizing it or really discussing it all that much because oil has been cyclically down, thanks to drill, baby, drill, and Trump allowing a lot more oil into the markets. I mean, oil bumped up a little bit, but I think if we ever get a material bump in oil, Canadian Natural Resources is going to absolutely crush it. But again, I'm not buying it individually. I just like owning it through BDY. 50% cash seems a bit high. Why? Who's holding 50% cash? That's crazy. I'm about 50% cash. Well, it depends on how much money you have, man. I mean, I don't know if I would be 50% cash if I only had like $500,000 or $1 million. But if I was sitting on like $2 million, $5 million, like I don't think it'd be a big deal to be 50% cash. But yeah, I would be a bit skittish on that because you're losing a lot to inflation and you can't time the bottoms of the market. That's the scary thing, I think. You got to be real careful when you start diluting yourself into the realm of, I'm going to hold cash. I know the market's going to crash. Now, if you're just holding cash to put it into, there's still a lot of good high yielding investments out there for cash. For instance, there's the US cash ETFs that we can buy here in Canada that are absolutely incredible. Is it just cash is the ticker for it? What's the US high yield saving? Let me just look it up because what's it trading at right now? US high yield savings account ETF stock. HISA, that's the one. There's two of them actually, but here's one of them. Like if you guys want to invest your cash, the best thing you can possibly do with it right now is put it into US savings accounts. And you can do it through these ETFs like HISU.U. Right now, they're still paying over 3%. That's pretty nice to see. So you get 3.71% right now. And these are incredibly stable investments. They don't do anything. They just put your money in high interest savings. And these trade in Canadian dollars, by the way. So you can get a 3.71% off the US savings accounts right now. There's another one by Globex as well. Globex has one that's pretty good, paying 3.9% right now. These are really interesting ETFs that I think are underappreciated because I think they're better personally right now than maybe GICs. You don't have to lock up your cash. Obviously, you're at the whims of interest rates. If interest rates go down tomorrow, your bank account savings rate's going to go down. But what an interesting ETF, just to put your money in. The best promotions along high interest savings accounts around the US and Canada. But you could do this. I mean, if you put your money in here, it's probably not the worst thing you can do if you're worried, if you're a little bit shaky on the market and you got a lot in there. I'd be happier with 30%. Yeah, that's around what Warren Buffett's level right now. Warren Buffett's sitting on what, 370 billion. Kyle, you should do a video on how to quickly assess a stock using your favorite tools. There's no real way to quickly assess a stock because at the end of the day, like you have to predict the future, right? That's the reality of it. And there's a lot of other things that come into play other than just predicting the future. Like you have to have a good sense of, fundamental reality, the hype behind the stock. Like Tesla, is a good example of just pure hype. Like there's no reason right now Tesla should be trading at the multiple it trades at. Tesla, by all definition, is a bubble. It's just a matter of when the musical chairs come to end and how long people are willing to support a fantasy, right? Because if the fantasy dies tomorrow and people lose hope, this thing is going to plummet below $100 a share easily. I mean, that's the fundamental reality of Tesla, right? But somehow people can get caught up in futures that don't exist yet. And, Tesla's done a horrible job at proving they can grow out their future. And I'm a pure believer that Tesla is a horrible executor on vision. Now, I get it. Like Elon has done a great job with SpaceX, Starlink, incredible. But you cannot sit here and tell me Tesla's been nothing short of a flop. They have an unprofitable electric vehicle business that has been dominated by BYD. That is the whole purpose behind Tesla, was to electrify the entire, auto world. They were supposed to be the largest auto company in the world. We all had hopes and dreams of it. They flopped miserably. And now you're expecting me to believe that they're going to, somehow succeed at robotics and all this other shit. It sounds like they're trying to do too much. It sounds like a company that doesn't have focus, right? Like Meta has focus. Like they're investing in the future, but their core fundamental business is a behemoth. Google has focus. Their core fundamental businesses are behemoths. Tesla, though their core fundamental business is doing okay, it's not growing. It's not a behemoth. It's only a massive market cap behind a fantasy of hype. And that's the fundamental reality of Tesla. So you can't just look at fundamental. Like there's so many things. It's impossible, right? Like I can give you the tools, but at the end of the day, the only way you're going to get rich buying individual stocks is because you know something that the rest of the world is just too dumb to figure out yet. Or Or you have a trading strategy like when we go into cyclical down periods like the Terrafor, where hedge funds and mutual funds out of fear and not understanding the future will oversell the market, because we go through dramatic periods of sell-offs because the market is a drama queen. So it'll over exaggerate to the up and the downside, which is why you have to be very careful in bull markets. If you're buying individual stocks that have a lot of hype behind them, for example, Robinhood and Palantir, I mean, they're very great companies, just not at the fundamentals that I'd be willing to pay for it. So, and it's really hard to tell somebody, like, I can give you another good example, which was like Canopy Growth Corp, right? Like, this was the first stock I ever bought. And I think this is a great example of why fundamentals don't matter either. I mean, I bought, Canopy Growth back in 2014. And, my whole thesis behind this stock was quite simple. They're going to legalize cannabis, and we're 3-4 years out from it happening, and nobody's talking about it. And once everybody starts talking about it, I think the stock is going to blow up. That was my entire bet behind this company. And it took me all of like 5 minutes to figure that out. And I made like 30 or 40 grand off like barely any money that I had invested. And I thought I wish I just threw like everything at it. I should have been a billionaire off that trade. It was so obvious. But these are rare things to happen. Like, these just don't happen all that often because I don't know enough about sectors or industries, right? So you got to ask yourself, what do you know? What do you know that I don't? What do you know that the market doesn't know about? That's how you get rich, man. Like, I felt like I understood Google at a 17 times multiple. I was all for it. I knew something and I got paid. I understood Take-Two Interactive. I understand Grand Theft Auto. I understand video games. It's something I deeply feel I understand. So like, I'll buy it, right? But that's the reality of investing. I know a guy that made millions off the oil market during the crash. I didn't buy any. Why didn't you buy oil stocks? Why didn't you leverage up on options in oil companies? Like, why didn't you do that? It was obvious. Oil went negative. There's no way we weren't going to use oil in the future. Why didn't you load the hell up on oil stocks? I didn't know it. It wasn't in my wheelhouse of knowledge, but it was obvious. Like, I mean, it's obvious to the right person, right? Take-Two Interactive is breaking my heart right now, and they can go die in a hole. I'm just like so over video games. It really breaks my soul that they have they fired 30 people for basically trying to like probably unionize the company, and that they just mistreat them, and they just spend a god awful amount of money on a game that should have been released back in fall that we should have made a shit ton of money on. And something tells me the game's going to flop. I feel like they're going to take too long. I don't know. I've lost a lot of hope I might still trade it because there's going to be hype behind it, but my hopes and dreams for that being a successful game are slowly depleting. Not sure why Meta is steering towards robotics. Mark always makes the mistakes and then goes back to the ad. So here's the thing. So this is the problem with I know a lot of people hate on Reality Labs, and I get it. Like, they spend a lot of money and they're not seeing any crazy growth behind it. But the reality is, I use VR like 4 or 5 days a week. I am obsessed with virtual reality, and I have been ever since Oculus came about. Like, I tried Oculus when it came out I can't even remember how old I was. Like, before Meta bought it, and it had to be hooked up to computers, and you had to put cameras in like all corners of your room. Like, I was just in utter awe of the technology back then. And then when Meta made it so I could like have a wireless version of it, I fell in love. I gave up everything for VR. I don't play outside of with my friends. I don't play video games. I gave up everything. Call of Duty. I gave up Fortnite years ago to play VR. And now it's like my obsession. So this is why I like it still. And I see where Meta's vision is in the future to merge it with augmented reality. And they're doing a great job, in my opinion. It's very expensive, but I think it's going to be a huge product market in the future. I mean, the glasses are getting there, and they're at a product level that is affordable and is insane. So, I mean, I think they're the leader in a sector that's underappreciated for tech. Is it generating a lot of revenue right now? No. But if they steal a sector of the market that doesn't exist right now, which is technology and glasses, and their first mover advantage, partnering and doing the right branding, that could be a multi-billion-dollar market in the future. At least I think it could be. But again, Mark and, Google, they have the utter opportunity to spend ungodly amounts of money into the future and just piss it away. because like, what are they going to do with all that cash? I don't want it as a dividend. I would much rather them be doing these investments because AI is the future. Gemini and Google, I still think are the leaders in AI. They were the early mover advantage. They just didn't, I think they were, I don't know what took them so long, like why they waited, because they've been working on AI stuff forever. Quantum computing. I mean, these companies they're going to blow our minds in ways that we'll never understand, I think, in the next 10 years. And I think they're going to be, they're going to be way bigger than they are today. They're going to be monopolies. They already are monopolies, but they're just underappreciated. What about TELUS and BCE? I wouldn't touch them with a 10-foot pole from, my personal preferences, but they just, like I said, I'm looking for growth, right? Like if you're an income oriented investor right now, I don't think there's a better place to look than in the telecom space because the crash has happened. Like, I don't think we can go much lower. They're in a recovery phase. So if you buy it, you're going to get a pretty reliable yield at this point, because if they were going to cut the dividends any more than Bell already has, they probably would. I don't see prices getting any lower from telecom giants giving you phone plans. So it's very likely the industry is bottomed. It's very competitive, but it's bottomed. So if you want to buy it, you're an income oriented investor. I think it's a good place to start where you get a cherry if we get a recovery, because I don't think they're going to go much lower. That's my opinion. It's not financial advice, but it's not an industry that like excites me. Like when I look at a company like Meta that's doing 20, 40 plus, revenue growth and like 30, 50 plus like earnings per share, Google doing 30 plus earnings per share right now, trading at multiples that are cheaper than TELUS and Bell. Like, what am I going to choose here? It's like weighing the options. It's like, again, guys, focus on the few, man. Figure out what your few is and don't lose focus on them, because that's where you're going to make your bank. The Meta sports glasses is a hit. I haven't bought them yet. I've been thinking about buying them, but I might wait for the second integration to come out, because the first VR, which by the way, I literally have both of them right there. I have the first rendition that came out, and then I got the, I think that's the Oculus 3 or whatever. And the Oculus, like the upgrades were so much better from that first rendition they did. Immigration also affects the telecoms. Yeah, I mean, they could have a great recovery in the next 2 years once they open up immigration again too, right? Like that's another good bull thing to look forward to if you're looking 3 to 5 years out, which you should be on any investment you're making. Ever looked at MDA space, Kyle? Pretty good financials. I have not. What's better, TELUS or Bell? I think TELUS is fundamentally better because the business models are a lot less competitive. Their security business is very foundational. I mean, I'm sure you've seen people that have TELUS security in their home. I know people that have TELUS security. That is a very undisruptible business. Most people do not change out their security providers every year. They have telehealth that's growing quite nicely. They have a lot of tech businesses they're involved with, like AI. They're building the first sovereign AI data center in Canada. TELUS is just a great company all around, I think, from a business standpoint. Now, fundamentally, they got to work out the revenue and the cash flow side of it, but they're getting there. I mean, they've done some, they've done the restructuring. So has Bell. They've done the layoffs. They've done they've done the debt payments. We're in a lower interest rate environment. All things point toward me of a bullish future from here. But that's just my opinion. Shave the head one day, bro. Maybe. I might. You don't like my Jimmy Neutron hair from the 90s? Can you explain to me why like all the kids today look the same? We were joking about this because like all kids have like this same haircut, like the fluffed up haircut. They all wear black a lot and like they all look the same. I always find it weird. Like I grew up in a generation where you had like goth kids, and like I used to have a blue mohawk, if you can believe that, like a full on mohawk, shaven sides. People were a little bit more colorful. Like you had your groups of kids in school. Now I just feel like everybody is just bleakly the same. Like I'm not that old, man. I'm like 33, but I'm driving around when I got to take the wife to work, or just when you see school come out and all these kids are waiting at the bus stop, there's no personality anymore. They just like, it makes me really want to like change my get up. Like I'm not much of a clothing guy, but I want to like just get quirky and weird with it and just be that guy, because nobody else seems to be anymore. Man, like even the music, right? Like when we grew up, like we had such an odd diversity of music. There was like dubstep and like heavy metal, and like people just listen to all kinds of stuff. Now like pop music is all merged into the same garbage, and like the 80s are still like, the golden era of music. My son is in grade 10 and has that bird's nest. I asked him if any birds have ever landed in his head. Lolly, he didn't get the joke. Yeah, I know, right? Like it's such a weird thing, man. It's like it's so weird. It's so very weird. GoldenEye. Yeah, N64. I still play that stuff, guys. I mean, I'm not gonna lie. I do play VR a lot, but I've been downloading a lot of hacked versions of like the old school Zelda Ocarina of Time. Like you can just download them on your phone. If you guys haven't done it yet, I'd highly recommend, if you want to nerd out with me, there's an app called Delta. It's the first time that Apple has ever allowed like basically ROMs on the iPhone. You've always really been able to do it on Android. But what's really great about having the access to ROMs on your phone is you can now download the hacked versions and the remakes of these games that people have done their own renditions of. And somebody did a very good version of Ocarina of Time called what's it called here? I'll let it load up. Horror of Arcadia, I think. And this was just a really fun, quick way of playing through like not Ocarina of Time. It's just a complete remake of Zelda, but it was really cool. And it's really fun seeing people like make their own versions of these old school games. I'm sure you've seen streamers play them all the time, right? Are you still a magician? No. It's a time pass for me at this point. I feel like Magic has died off heavily. My life has been a roller coaster of insanity, but being a magician for 10 years was just it was such a peculiar time of my life. I'm so weird. But man, like, yeah, it bothers me immensely because I'm a theater kid at heart. I've always been a theater kid. I'm a clown, always been a clown. I was that loser in school. Like, I'm sure you saw those loser kids back when there was, I don't know if there's still jocks. They even still have jocks in school. Like, I was a loser, man. I was a very nerdy kid, got involved with the wrong crowd. I didn't relate to anybody. I hate sports. My wife dragged me to watch the Jays on TV. I mean, like, I couldn't tell you the first thing about hockey, soccer, NASCAR. I don't give two shits. You want to talk about theater, lighting, speakers, AV. Yeah, you want to talk about stocks, nerdy shit, math. Like, I'm down for it. Video games, I'm down for it. But I'm just very sad that theater's dying, man. And it's a deep part of my heart that I still like going to. I watch a lot of theater shows still. Love theater, love watching live performance. It bothers me that I'm the youngest person that goes to it. Me and my fiance is also, luckily she's into that stuff. And when we go to shows, man, like it's mostly old people. I'm a guy that was going and watching, I'd go to, what's the place called where Justin Bieber got discovered, where he grew up. God damn, why am I blanking so hard? I know it's late. Give me a break. What's it called, guys? I'd go there and watch like a lot of the old school plays and stuff with some like director friends that I used to have. But whatever. I mean, it's a sad era we live in. We're all glued to screens now. You should do a card trick on your next live feed. Do I even have cards here? I could show you a card trick right now. Do I have cards on my desk? The sad reality is I don't even think I have cards laying around here all that much anymore. I thought I had some in here somewhere. Let me take a look real quick. Cards. Do we have cards? Oh, we do have cards. What kind of cards are these? I don't know if I can show you a quick trick or not. It's not like really the best deck in the world. We'll see if I still got my fidgety hands here. Let's try and show this off real quick. Yeah, we can still shuffle pretty decently. Not bad. One hand cuts going on there. This isn't a full deck. I'm missing a few cards, but here, we'll try this real quick. Are you ready? Try this real quick. This is a hard thing to do. Oh, try that again. Here we go. Oh, in the air and in the mouth. Look at that. 5 years forcibly retired by the pandemic, and he still got it. It's like card check. Let's see if we can do this real quick too. Right, where you go. Oh, flew out of my hands. Try that again. You can make it look like it's floating. What's your favorite play or musical? So we went and watched Back to the Future was really good. Harry Potter, the live show was phenomenal. If you're into live plays, I think that's one of the best ones that went out recently. If you really like Harry Potter, I think it was a good continuation of the story. Really cool. Yeah, like I said, we try and watch some stuff here and there, especially when we go downtown to like the Mirvish Theater. My uncles have a pass, and sometimes if they don't want to watch something, they'll give us the tickets for free, which is really cool. Renting Kyle for my next party. If it's for one of you guys, maybe I'll come in and I'll do some tricks for you guys. Kyle, I was a jock in the 80s, I admire your honesty and openness. I feel like we could get along Breakfast Club style. These days, I've grown into myself. Me and my wife joke if we would ever date each other when we were in high school, because we were like immense. Like she considered herself a loser. I definitely considered myself a loser. I hung out with the druggy crowd. I survived that, thank God, because a lot of my friends didn't. But I think I hung out with those guys because they were just more disconnected from school. I hated school. I wasn't being challenged enough at the time. And I just didn't like kids in school. I was very kind of a loner in a sense. Didn't have a lot of friends until I was like 14 or 15. Like, couldn't keep friends through most of my childhood. I was a very weird kid. But now, like you, I mean, being a jock, like you probably grew out of it, right? Like you might have been a douchebag in high school, and now you're like, I don't know if you were, like you could have been a jock and not a douchebag. But I mean, I feel like you can't judge yourself in high school, and you can't like judge people for how they used to be. So I mean, like me as an adult, I get along with everybody. I hang out with all kinds of people now. I have lots of friends in all kinds of different industries and facets. Like I'm an adult. Like eventually you just grow up and you're not like a defined thing anymore. But in high school, you are definitely a defined thing. I'm no more of a magician than I am a financer, or like, we're everything, right? Like we're all kinds of things. We're husbands, we're wives, we're fathers, mothers, we're career oriented, we're, depressed. We're like, we go through all of this stuff at this point. Who is a better magician? You were Andre Gique. Have you ever reached out to him about finance? No, not really. A better magician, it depends on how you define better. I was real cocky about it because I considered myself to be very good at it. I did it successfully for a decade and I turned it into a career. So I wasn't doing anything else. Like I made a reasonable living at it, which wasn't an easy thing to do at all. But yeah, I consider myself to be incredibly unique. My shows were very different. They were based on the history of magic. Everything from like, I used to do hypnosis shows and explain how psychics work. And I would do extreme stunts like Chris Angel, lay on glass, let people stand on my face, shove quarters in my eye sockets and nails up my nose. I'd eat glass. I do all kinds of weird shit. I'm a little too old for that now, I think. But you probably get along with Linus Sebastian. He flew to England to see the last perform of Donny Osmond, Joe. So that'd be cool. I did a bucket list thing and I went to Vegas in 2019 and I saw all my favorite magicians because they were getting old. Some of them were dying. If you want to watch a really good video, I'll end on this note. I know it's kind of personable and off track here, but I'll end on this note because I think it's a really cool thing. I was very integrated into the magic world and I knew everybody at the time, but Tom Mullica was a very famous magician back in the day, and he has an incredibly famous cigarette routine. Maybe I'll give you a quick demo of it.
Sarah, just take out any card that you'd like.
I'm going to skip through this because it's a bit long, but I just want to show you the cigarette aspect of this because it's really interesting. He eats cigarettes. He just keeps lighting them and eating them. And this is back in like what, the 80s, 90s? Very famous magician, if you've never heard of him. And then he just takes it even further. Like he just keeps doing it. You guys can look at the video if you want to watch it. It's really cool. But anyways, I was literally talking to this guy and I was ordering a magic trick off of him. And I was literally talking to him and he shipped it up from the States. And literally a week after I got it, he went in for a very routine surgery and unfortunately passed away during the surgery. And, I had this like wake up call that, it's a generation that's going to be put behind us. And I still really feel like theater's dying. So I just had to get like, I had to get the fulfillment of like the inspiration and just like, what magic used to be back in the day of like, 80s Las Vegas, when you had like the most expensive show in history, which was like Siegfried and Roy. Then they spent like $400 million back in the 80s on that show, where like it was the only live show in history with tigers, panthers, like elephants, like all these animals, like topless women, all on stage, no barrier between you and them. It was just a wild time, and I can only live it through like the eyes of my uncles and people that actually saw them live. But like it really hurt my soul when Tom passed away. So my fiance and I, we did a bucket list thing back in 2019, and I saw everybody. Like I made it a mission to see every single magician that ever inspired me. So David Blaine, Chris Angel, Copperfield, Penn and Teller, you name it. We went and saw them, and I feel like I fulfilled that aspect of my life. Like I don't feel like I have any regrets doing what I did. I don't feel the need to go back to it. But yeah, I was not an asshole jock, but I had to play with some of them. To each their own. I am an elementary teacher, as I was a coach in high school basketball. Work with all kinds of kids. Sad to see troubled kids at such a young age. It's great that most all turn out okay. Most find their niche. Hopefully, man, that's all you could ask for, right? Just like the top 10 of the S&P 500 are no longer on the list. Nothing lasts forever. Yeah, I mean, that's the sad reality, right? Like it's, I have a great deep deal of nostalgia for, but Magic's peaked, man. Like I really feel like magicians used to be the special effects artists of the past. I mean, magicians are the reason that we have TV. Like live shows were invented by magicians. Like it used to be a magic trick in a show. Literally moving pictures, right? So, I mean, magicians definitely inspired like modern day entertainment to a major degree. They were innovators in many senses of the word. I mean, even from like old school, like I have a great deep admiration too. If you guys don't watch like Mythbusters, do you ever watch what's his name? I watch him all the time. He runs a YouTube channel called Tested. Adam Savage, I think is let me just look it up real quick. Yeah, I love this guy because I consider him a magician as well. Like he worked on Star Wars, and these guys were building all the props. And like, you know, back in the 80s, like people had to really innovate and do live magic tricks on television to try and make scenery work. And you know, this guy, I have a great deal of respect for these guys that lived through that kind of generation of you know, just building very unique things that had to, you know, be worked out in a way that could be told through a story that you couldn't really figure out when you were watching a movie, right? Like miniatures and all that stuff. It's really cool stuff. But I'm rambling here, guys. I appreciate you all stopping in this evening. We've been going far longer than I anticipated, but we got way off track. I know I mostly talk about stocks, but maybe I should start integrating other aspects of my life into this channel. But thanks so much, guys, and appreciate you stopping in. One of the OGs, the legends. I got to give you guys wrenches so you can moderate the chat for the OGs. Is HHIS okay for income? We'll do another video on potential option stocks that are worth buying, but do not touch the yield max. Avoid that like the plague. But on that note, stay cool, stay awesome, and I'll catch you in the next one.